The only profit I made so far this week was from EU or AUD. It wasn't a swing trade. It was like an intraday type of trade, risking 20 some pips, 25 pips to make 75, 80 pips. And then as soon as it went close to like 55 pips, which is almost like a 1 to 3 hour ratio, I decided to pay myself and take 70% profit, move my stop loss, so I could care less what happened with EU or AUD. And that's the right way to trade, right? As soon as your trade it's a 1 to 2 hour ratio plus, make sure you move your stop loss to entry and also pay yourself, right? Because in no way I'm going to be up 1 to 2 hour ratio, almost 1 to 3 hour ratio, and let the trade to go up and hit my stop loss and lose money, right? If I'm 1 to 1 hour ratio, I'm not doing anything yet. But the minute I cross the 1 to 2 hour ratio plus, I'm definitely moving my stop loss to break even at the very least, right? Because you just gotta know how to manage your trade. Sometimes I'm not going to be able to tell you guys to update your stop loss or to take partial profit, but you guys should be able to tell when you're up over 1 to 2 hour ratio, right? It's very simple, right? Let's say if your stop loss is at 20 pips and you're currently up over 55 some pips, just like the EU or AUD trade, all you have to do is, swipe on the trade. If you're using 0.10 lot size, you can secure 0.07 lot size, which is 70% of the profit, and you leave 0.03 lot size running, and you move your stop loss to your entry price. Your entry price is the price that you got into the market, into the trade. It's always going to be the first number, right? On the trade tab, and then you use that number, change it to your stop loss, and then you should be good to go, right? So I'm not going to be doing much tonight at all. I'm just going to do the quick analysis on GBP USD because we caught over 320 something pips on GBP USD. A lot of guys in the group actually doubled their account. I didn't double my account, but I know I made quite a bit. That can sustain me for over a month, so I'm good with that. So it was a beautiful trade, even though we did get in late a little bit, but we did manage to catch all the play till the 0%, right? So I'm going to go over that trade, and I'm going to also prep GBPUSD for the next buy as well. So this was the setup, I haven't touched the setup at all. It's still the same setup that I called the buy on it, right? So obviously I was expecting GBPUSD to go for the 61.8%. That's where the trend line, I'm going to the weekly so I can trade to guys properly, right? That's where the trend line is at on the weekly time frame. I was expecting GBPUSD to drop to the 61.8%, so we can get in on the buy. But yet again, like I always say, guys, right? 61% is the sweet spot, but do not ignore 50%, right? Because sometimes the market will go for the 50% and then it will take off, right? Because all I did on the GBPUSD trade, I scaled down into the daily time frame and even to the lower time frame, also M15. As you can see, as soon as the market went for the 50% retracement, guess what happened, right? Right, lost momentum, give you a huge bullish engulfing, which is a strong indication that the buyers are in control, that GBPUSD was going to shoot up. That's when I called the buy somewhere around here. This was stop loss above 45 pips, and we made over 220 pips, almost a 1 to 10 hour ratio, right? 1 to 8 hour ratio, right? This was a beautiful trade, right? The 61.8% again is the sweet spot, that we're waiting on for the higher low to be created for us to get in. But if the market does go for the 50%, respects it, and also give you some bullish confluences telling you buyers are in control, feel free to get in on that as well, right? And then that's why that's why I actually called the trade on GBP USD, right? Very simple, guys, right? The market give us a low, went all the way up to give you a high, went all the way down to give you a higher low, went all the way up to give you a higher high because this guy is higher than this, then came all the way down to give you another high low, right? So as soon as I realized the market went all the way up to give me a higher high, all I did was place my fib from the most recent higher low, which is this guy, to the most recent higher high, right? Which was this guy up there. And then I waited for the market to create the next higher low between the 50%, 61% retracement for me to get in, right? So remember, guys, if the market is trending up, do not try to look for sales, right? Do not try to counter trade the market. Only look for buys because you'll feel way safer buying it than selling it, right? So all you have to do is wait for the market to create the next higher low for you to get in, right? Because if the market is trending up, you'll be getting low highs, higher lows, higher highs, higher lows, higher highs again. All you have to do is, in this case, right, you're gonna have to wait for the market to drop to give you, right? So let's say this becomes the higher high, right? All the way up there is the higher high. All you have to do is wait for the market to drop to give you the next higher low, right? Let's say if you have to place the fib, right? And that's when you have to use the Fibonacci retracement, right? The Fibonacci retracement is going to tell you when is a good time to get in, right? The way we use the strategy is we look to get in between the 50% and 61% Fib retracement. Obviously, we have to wait for the market to create the structure, to respect the level, and also to give you some bullish confluences telling you the buyers are in control for you to get in, right? So all you have to do is place your Fib, right? Because now this becomes the most recent higher low, right? Because this guy is higher than this, right? Then you have to place the Fib from here to there, right? And then wait for the market to create the next higher low down there, right? You use a rectangle box, right? So now the market give you 1, 2, 3, 4, 5 touches between the 50%, 61% retracement. Also starting to give you some bullish confluences like a bullish engulfing or some dojis, or as soon as you realize the sellers are no longer in control and the buyers are coming in, right? You place your buy, right? Stop loss goes to the 78.6, and you're gonna have to ride it all the way up again to the 0% for TP1, which was this is where the previous structure was. And then you go up to if you're patient enough, even you can also write it all the way down, all the way up to the minus 27, right? The reason you can hold it to the minus for the minus 7% is because remember, guys, if the market is trending up, you must be getting what? Higher lows and higher highs, right? Because the market must create something higher than this to give you the high at the minus 27%. Right. When I tell you, the strategy is very, 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 very simple to use. And it is even easier to use if you're extremely patient and if you look into swing trade, because you know what you're looking for, right? The first thing you got to do is get the trend right. If it is bullish, you look for buyers only. Bullish means it is trending up. If it is bearish, you look for sales only. Bearish means it is trending down.